Welcome, dear traders. You are watching a recap of the Asian session. Yesterday, all US assets declined following the Fed's rate decision. Wall Street, US Treasury notes, and the US dollar closed Wednesday with losses. What caused such a sharp decrease? How did it affect the Asian session? Let's discuss it in our video review of the Asian trade. As widely expected, the Fed Reserve raised the key rate by 25 basis points, and this decision hardly came as a surprise to anyone. However, the US dollar did not climb as it usually did after a rate increase. Why so? The fact is that traders factored in the rate hike at the May meeting of a long time ago. Besides, the Fed is likely to switch to a softer stance in the near future. Jerome Powell hinted at a possible pause in June. For the US dollar, this is an extremely bearish factor. Powell tried to speak as cautiously as possible. However, the phrase "we are closer" or maybe even there boosted a bullish bias in the equity markets. At the same time, the regulator ruled out the possibility of a rate cut before the end of the year. This prospect might have helped the US dollar to recover, if not for new woes in the banking sector. Immediately after the announcement of the Fed's rate decision, another US regional bank, PacWest Bancorp, reported troubles. Its shares plunged by 50%. This news reminded investors of the precarious health of some banks despite regulators' attempts to mitigate the crisis. For the US dollar, the prolongation of the banking crisis is also unfavorable. It saw a larger sell-off yesterday following the Fed's rate decision and the possible bankruptcy of a PacWest Bancorp. The greenback failed to grow either yesterday or in the Asian session today. The US dollar index fell to the early low of 101 points versus its main rivals. Now traders are anticipating the ECB meeting. The regulator is projected to raise the benchmark rate by even 50 basis points. In this case, the US dollar may sink even more amid a stronger euro. As seen on the chart, it managed to rebound slightly, hovering in the range of 101 and 101.20. Overall, the US currency remains in the red zone, trading at 101.20. The yen benefited from turbulence in the stock and foreign exchange markets. Despite the Fed's statements about the stability of the banking sector, the collapse of another regional lender shows the opposite. This is why more and more investors are revising their portfolios in favor of the yen and the Swiss franc. A decline in the US government bond yields and risk aversion helped the yen rise, and the dollar-yen pair slid to 136.60. However, in Japan, market uncertainty it is also might as traders struggle to predict the Bank of Japan's next steps on monetary policy. Inflation keeps rising, and the regulator is still unable to curb it. Yet, given the woes in the global economy, the yen looks like a perfect asset to protect oneself from risks. In the Asian session, it was trading in the range of 134.20 and 134.80. The Australian currency also tried to grow amid weaker US dollar. It almost touched the target level of 0.6670. However, it slid into a narrow range due to a drop in risk appetite on Wall Street. The Aussie is extremely vulnerable to movements in the US stock market. At the end of the Asian session, the Aussie became less volatile and moderately declined in the range of 0.6640 and 0.6702. Another negative factor is foreign oil prices and news from China, the main trading partner of the commodity countries. The manufacturing PMI index in China decreased to 49.5 points. This was the first contraction in factory activity since February 2023. Input and selling prices fell at the steepest pace in more than 7 years. The New Zealand dollar also added gains in the morning. At the end of the Asian session, the Kiwi dollar pair reached 0.6239. The Reserve Bank of New Zealand also boosted the national currency. On Wednesday, it released its annual financial stability report. In the report, the regulator noted that a large rise in unemployment remained the biggest risk to domestic financial stability. However, cash flow pressures in households are growing and buffers are likely to be tested, it pointed out. Therefore, traders expect the regulator to stick to its hawkish stance in the future, given the expectations of more rate hikes and the falling US dollar. The kiwi was steadily rising in the bullish range of 0.6207 and 0.6256. And that's all for now. Subscribe to the channel and keep your finger on the pulse. And see you soon.